But the big story right now seems to be the $6 trillion budget that Rich was outlining. An issue I want to take up with my next guest, Stacey Cunningham, of course, the president of the New York Stock Exchange. First woman president of the New York Stock Exchange, I think 3 years ago this week, right, Stacey?
Yeah, I guess that's right. Yeah, it's been 3 years.
All right, congratulations on that. I do want to get your thoughts on, I don't normally like to kick off with talking about boring old big trillion-dollar budgets, but this is a $6 trillion one, and tucked in it, Stacey, is this notion that the capital gains tax increase starts in April. So assuming, and it's a big assumption, this goes through, investors, would not benefit selling now to take advantage of the lower rates still in effect. Those rates would be in effect already. What do you make of that?
Well, I do think it's a challenge when investors don't have full information at the time of their decisions. So to apply that retroactively, I do think, frankly, is a concern for investors who may have thought about the impact of their trading decisions. But it was just fun to hear, seeing the barbecuing, seeing the traffic picking up in Cleveland, Ohio. I mean, things are starting to feel like they're coming back to normal. So I'm choosing to focus on the optimistic part of where we are in the economy right now.
Yeah, I think you've got that right. I think, a lot of this is reflective of an improving economy. You could talk about shortages and all the rest, but there's a great demand as people come out in this country. Where do you draw the line between that and something akin to what we experienced, decades ago?
Yeah, I certainly think if we've learned anything from this past year, we were surprised by a lot of the things as they've unfolded, and so I don't think we should put too much focus on these short-term trends. I mean, we saw in the spring that the market was completely shut down, and it turned out that the capital markets had its busiest year ever. So as we're looking at the economy, there's a lot of money coming into the economy. A lot of those small businesses that were most impacted are starting to recover and are the beneficiaries of a lot of those dollars. And so I wouldn't try to predict what's going to happen over the short term. The Fed's going to monitor the situation and make the policy decisions they deem appropriate.
Does it matter from your purview, heading up one of the biggest exchanges in the world, whether Jerome Powell stays on at the Federal Reserve as chairman? There's been a back and forth on this, and that he might be, ironically, the default choice to stay in the job, which is a big turnaround from his fortunes under Donald Trump when it looked like he was going to go. Is it important to you that he stay on the job?
We celebrated 2 weeks ago our 229th anniversary at the New York Stock Exchange. We've lived through all sorts of administrations, all sorts of leaders. We have great working relationships with our government, regardless of who's in those seats. We work together on making sure our markets continue to be the world standard. We'll do that no matter what comes our way. We know how to navigate all sorts of environments.
All right, because the former Federal Reserve Chairman Janet Yellen, now Treasury Secretary, is speaking today and talking about a global minimum tax, also talking about the need for more spending and that it will be justified and help the economy. Do you agree with that?
I'm really focusing on all of what we're celebrating right now in the economy. It is opening up. We literally have 200 people here today celebrating the IPO of FIGS. They have healthcare workers dancing in the street outside. Those are the signs that I'm looking at and seeing. People are excited and feel good about what's happening. They're literally dancing in the streets, and it's such a great moment to be celebrating our healthcare community, because they're the ones that got us to this point where we're talking about whether or not inflation is a risk. We wouldn't be in a position of such strength if we didn't have those supporting us over the past year. So I'm confident that we will navigate what comes our way over the next year, just as we have up to this point.
All right. Will the dancing continue, though, if we do face higher taxes? I know you have been concerned about some of the charges that Elizabeth Warren, for example, has made of financial institutions and saying that it's like a casino atmosphere. You quickly countered that there are rules and regulations in place and heavily policed actions in place that do not make this a casino environment, talking particularly about the exchange. But that's a prevailing view among many on Capitol Hill, especially given how the big money investment banker types were sort of harpooned yesterday in the Senate and today in the House. Are you worried about that message that's coming from Washington, that they're being targeted, that maybe by extension, so is Wall Street?
Our markets are important for all investors, and so it's not a casino. If you think about an investor who makes small short-term investments in the market, over time, they're going to win. And that's very different from how that works in a casino. If you're making small bets in a casino over time, you're most likely to lose. And so the markets are very different. We want those investors, though, to be well educated. So it's important that we act, all of us that are in leadership positions across our financial markets, that we act responsibly and make sure we're putting in their appropriate regulations to protect investors. I focus every single day on that balance between investor access to opportunity and investor protections. That's my job. That's what we have to always be focused on. And as we consider policy decisions, we also need to recognize the unintended consequences that come with them. So some of the policies that you've referenced that I have been against are things like a tax on transactions. We need to understand who ultimately pays that at the end of the day. And it's those investors that we're trying to protect, those end investors. So consequences they're a fact of decisions that we make, whether they be tax policy or others. We need to make sure that we're not losing sight of who are our markets for. I mean, the capital markets that we have here have really led the growth in this country over the past 2 centuries. We don't want to give that away. Even if we have good intentions, we need to understand the risks if we take actions that drive a lot of that investment to other locations.
Stacey, you were mentioning that financial transaction tax that New York was kicking around, I believe New Jersey for a while as well, that you would move if it came to that. Did you mean that? If it did come to pass, would you bolt?
We would do what our customers are asking us to do. So it's not a tax that the New York Stock Exchange would end up paying. As I said, it's a tax for the end investors. If our customers, on behalf of their customers, are saying that we should move in order to give their customers a better experience, we absolutely would consider doing that. Not because we want to, but that's because there are consequences to policy decisions. And so we are constantly looking at other states that might have tax-friendlier locations for backup facilities and others. We would love to stay in New York. I certainly want to keep the New York Stock Exchange in New York City. And that's our goal.
All right, but if this became a federal issue, and some on Capitol Hill have talked about such transaction taxes, Elizabeth Warren among them, Bernie Sanders, then you'd have to move from the country.
Well, investment certainly runs the risk of moving. And we've seen, if you look at the top 10 IPOs over the past 3 years, only 2 of them have happened in the United States. We should not take our position as the primary financial markets for the world for granted, because there is a risk that investors will find access to opportunity. If those opportunities are outside of the United States, those dollars will find their way there. We have seen time and time again that financial transaction taxes don't work, and that investors find their ways around them by moving into less transparent off-exchange products, by moving geographically into other locations. Those are the type of consequences we need to acknowledge are real if we make decisions around policies like that.
You know, while I still have you in just the last minute or two we have, Stacey, I'd be curious your thought on Bitcoin. It's seen as an alternative investment, a sort of a tradition-bashing rogue investment. Carl Icahn, among the latest to say that cryptocurrencies interest him in a big way. He's committed about $1 billion to it. Only days after Ray Dalio had said he'd rather own Bitcoin than a bond. Is this a threat to the New York Stock Exchange? Is this a threat to traditional stock investing?
Certainly, it's an emerging product that many individuals are investing in, and many of the brightest minds in finance are looking at more closely. What we do know is that as products like this continue to grow, regulators and the government will also be looking at what are the appropriate guardrails that we have around that to protect investors. So the way Bitcoin works today and the blockchain technology underneath it is not the same. It couldn't process the 330 billion messages we process on a busy day here at the New York Stock Exchange. So I don't expect it to be displacing us like in that way. I certainly think, though, that it's something that's going to continue to grow. It's not over, but I also expect the regulators and the government to take a look at it and view whether or not there are appropriate guardrails on it.
Because investors seem to think that Coinbase, which is sort of a market of all things crypto, for a while had a value well north of the Intercontinental Stock Exchange, of course, the New York Stock Exchange parent, and that sounds weird. It doesn't make sense, but it is what it is. Are you worried about that?
I'm not worried. I mean, there's certainly investors have goals for the long term, and I'm not worried about the value that we continue to provide to issuers, to their investors, the new products that we continue to design and launch so that we're giving investors access to more opportunity than they've ever had. I'm excited about that. I'm excited about where we are today and the fact that we're celebrating the 1-year anniversary of reopening after being closed in the midst of a pandemic. So I'm optimistic about where we are, both at the New York Stock Exchange, for New York City, for our country more broadly. I'm focusing on the good stuff.
All right, as you should. All right, that's a good view of things. Stacey Cunningham, thank you. The president of the New York Stock Exchange. Have a wonderful weekend.